Today, traders again expressed fragile optimism. Despite the growing number of the coronavirus cases, investors take notice of macroeconomic data. Investors welcomed the official data from China, which proved a revival in China's manufacturing sector. Having tumbled to a historic low in February, a PMI rebounded to the expansion territory with the strongest score since September 2017. Such upbeat data provides evidence of a fast recovery in China's economy. However, investors temper optimism amid global economic uncertainty. Besides, countries around the world tighten lockdowns. So the caution's sentiment enabled the US dollar index surpass the level of 99 points, briefly touching 99.50. Another reason behind the greenback strength is buoyant demand for dollar liquidity at the end of the quarter. Meanwhile, governments in advanced countries are making efforts to mitigate the damage from the epidemic. Yesterday, G20 trade ministers held an online conference. They came up with a decision to shore up micro, small and medium-sized businesses, as well as to ensure a smooth operation and prompt revival of global supply chains. Such news somehow improved the appetite for risk. Thus, the US dollar edged up against the yen. The dollar-yen pair climbed over 108. That opens the door to 109.40. Currently, the currency pair is hovering at near 108.50. We are waiting for the pair to resume its rise. Buyers of the Australian dollar failed to push the AUDUSD pair above the resistance level of 0.6206. The bearish outlook is still valid. As soon as 0.6078 is broken, it makes sense to open short positions with a target level of 0.5838, placing stop loss above the intraday high. Opening long positions on the AUDUSD pair poses a risk, but it's still possible. Setting take profit above 0.6210 and stop loss below the intraday low. That's all for now. We wish you a profitable deal. See you on our channel with a new video in a couple of hours.